First in business worldwide. Let's now take you through the markets in West Africa, starting with the BRVM. The BRVM 10 index closed trading at 228 points yesterday. That's up about 0.8%, while the composite index was up 0.7% to 205 points. Total value traded on the day was 55 million CFA francs, so pretty light trading. But then we did see the currency at 507 CFA to the US dollar. Moving on to Ghana, we saw that market inch higher yesterday. The GSE Composite Index closing at 1,884 points, and the GSE Financial Stock Index also slightly higher to 1,602 points. Yesterday, that index is up 54%. The currency stable at 2 cedis and 4 pesewas. Now let's move on to Nigeria. The Nigerian market, we saw it rising recently, but yesterday we did see it fall back a little bit, down about 0.25% to 35,949 points for the NSE All Share Index, and total value traded did rise significantly to 4.1 billion naira, and yet the day before we did see it fall back quite a bit. And for this year, the NSE index is up about 28%. Let's move on to the fixed income markets now, and of course the currency. The Naira appreciated for the third consecutive time this week to 160.35 Naira to the US dollar yesterday, as the central bank reintroduced forward contracts to manage demand for the greenback. To review the fixed income and currency markets, I'm now joined by Thaddeus Udegbe, trader at Diamond Bank. Thank you so much, Thaddeus, for joining us. All right, Thaddeus, let's talk about this forward contract and the impact you think it's likely to have on the market. I understand it's been reintroduced after about a year, so I get the sense that you begin to see these things come back to the market when there's pressure, and clearly there has been pressure on the Naira recently. What's the likely impact for you?
Yeah, the forward exchange contract was introduced by the CBN sometime in 2011 to provide customers with the opportunity to hedge, particularly customers that have long-term exposure in foreign currency, to hedge against their exposure in that market. However, the market picked up in 2011, and of course the CBN offered various tenors of forwards. We saw 7-day, 30-day, 60-day, 90-day, 180-day, and 365-day forwards that was sold in that market at that time. And of course, we got a number of demands at that forward market at that time. However, there was a challenge with the 1-year forward as a result of the fact that the interest rate differential between the NIBOR and the US LIBOR was very high. And so the forward point, the premium on that 1 year was very high. So a number of customers pulled back from that tenor of forward. However, we saw a number of demand for the 7-day, 30-day, 60-day, and 90-day. There was a number of demands, and they were actively subscribed by customers. However, as pressure at the interbank market subsided in 2011, the market was not actually suspended. It just simply fizzled out as a result of no demand.
Right.
However, this week, CBN, having seen the pressure at the exchange rate and the fact that some customers might begin to front-load demand, and CBN, as part of its measures to ensure stability at the interbank market, and also to ensure that customers are able to smooth out their demand, the CBN reannounced the forward market. It's not that the market is new; the market has been in existence, but just that CBN made a reannouncement that market should that we should begin to inform our customers that the window is still available, so that any customer who is willing and ready to hedge its forward exposure.
But what's your take?
That window. The auction is held every Wednesday.
Right. Do you get a sense that this is something that is going to work in terms of reducing the demand in the spot market?
Demand at the interbank market?
Spot market.
Spot market? No, not necessarily. You know, at the spot market, what you have, particularly at W, the demand there is restricted to certain customers. However, at the interbank market, you have a number of other demands coming in there, particularly portfolio investors trying to sell off their bond position and then have access to foreign currency. So at that, I'm not sure those people are accommodated in the forward contract. I think basically it's customers that have trade transactions that are allowed to come to the forward market. So if you look at that, I don't think it will really have much impact at the interbank market.
All right. So clearly the central bank will continue to have a tough challenge in keeping the Naira stable. Well, let's move on and let's talk a bit about the OMO market. And what I'm gathering now is that after some activity earlier on, a couple of weeks ago, we're now beginning to see demand slow down in the OMO market. Can you just talk us through the recent OMO transactions?
Yeah, that's an interesting development this week. CBN offered OMO auction twice this week. Of course, there was no sale at those auctions as a result of the high bid yield investors demanded at the auction. However, this action of CBN, the failure of CBN to sell OMO bills at the auction, helped to stabilize the Treasury bills OTC market this week. If you look at the UK, you find that there was a moderation in volatility across the over 30 maturities that are being traded. And of course, if you look at the 30-day bucket, you find that the yield on that had remained fairly stable at 11.7%, while the one-year bucket had traded fairly stable at 14%. Apart from the OMO auction that helped stabilize the market, other conditions in the market helped to stabilize the activity in the Treasury bills market. The low interbank lending rates and, of course, the high liquidity that we've seen in the market this week, they all contributed to what we saw, the stability we saw at the Treasury bills market.
All right. So what?
And looking at today, we expect about 141 billion worth of Treasury bills to mature today.
Yeah.
Which will further put downward pressure on the money market rates and Treasury bills here.
All right.
And beyond this week, looking at this quarter, also we are looking at 1.9 trillion worth of Treasury bills that will mature this quarter. And out of this 1.7 trillion that are expected to mature, CBN from its calendar will take out about 561 billion. And if you net this from what is maturing, in fact, we have a net inflow of about 1.2 trillion coming into this quarter from Treasury bills. And that would mean that the downward pressure on yield on Treasury bills will continue.
Right. What kind of demand are we seeing?
If other factors are kept constant.
Right. Okay, what kind of demand are we seeing for bonds, though, particularly from the pension funds?
Yeah, like we know, the market has been very bearish and volatile in the last couple of weeks. However, this week, we've seen some stability in that market. We've seen a moderate price action around the 5-year, 7-year, and 10-year bonds, benchmark bonds, which are basically where the pension funds are more interested. From what we saw this week, we found out that there has been stability as a result of the demand from domestic investors, particularly institutional investors and pension fund investors who have found the yield at the present level very okay for their books. And we've seen demand coming from that sector, which has tried to stabilize the market for now.
All right.
However, in the near term, I don't. Okay.
Yeah, go ahead.
In the near term, I don't think the stability we have in the market will continue, particularly on the bond side, because as investors begin to worry about the potential exit of portfolio investors in the market as the U.S. economy continues to recover as we head towards September.